This is James with WSTrades.com. I want to provide an update here on NIO. So I was looking at the weekly time frame here, just looking at some earnings reports from the last couple of years. You can see at the beginning of the chart, the numbers were pretty small, although they were losing money. You can see the earnings per share, the numbers are pretty small at losing 12 cents, 14 cents, 23 cents, 21 cents, and 6 cents. But then lately, if you kind of look at what's been going on the last 7 earnings quarters, the numbers are a lot bigger. So losing $1.07, losing 79 cents, losing $1.34. This one's not too bad, losing 30 cents per share, but then losing $3.07, and then losing $2.51 a share. Those numbers are pretty high. And then this latest quarter seems to come down quite a bit, losing 51 cents a share. But let's actually look at what it means on the income statement, because you can see these 2 quarters here, these 2 previous quarters, before the latest earnings report, these numbers are really high. But let's actually look at how much was lost, because these 2 quarters here look a lot worse than the most recent quarter. But if we come into the income statement, net income common stockholders, that's the earnings for the quarter ending June 30th. That's a much bigger loss than the 2 previous quarters. So I know these numbers look a little bit high here, but if you actually look at the dollar amount lost, it's a lot bigger. So you can see right here, they lost $6.1 billion versus the 2 quarters before that, they only lost 5.8 and 4.8 billion. So I know those 2 quarters look a lot worse, but actually this latest quarter, they lost more money on earnings per share. And we can look at the cash flow statement as well. Actually, I don't think they have the quarterly cash flow in here. We can take a look at the annual cash flow statement here, and you can kind of see that they're just kind of all over the place. 2019 was pretty brutal when it comes to operations, where they had negative 8.7 billion in the negative. And then they had a couple years here where they were actually in the positive, around 1.9 billion in operating cash flow. But then for 2022, they swung back to negative operating cash flow, and they've only had 1 year here where they've actually had positive free cash flow, and that was 2020. And you can kind of see here in 2019, even though this number was huge at negative 8.7 billion on operating cash flow, the free cash flow was still sitting around that negative number of 10.4 billion. And here you can see the operating cash flow is quite a bit better, although it's still a massive negative number at 3.8 billion. That didn't really change their free cash flow when you compare it to 2019. So yeah, 2020 and 2021 were much better years for NIO. And then, since 2022, things have been pretty brutal when you look at cash flow and when you look at earnings per share. So for me, let's take a look at the statistics tab here really quick, and let's just check out some metrics. Last 12 months, operating margin, negative 44.8%. Return on assets, last 12 months, negative 15%. Return on equity, last 12 months, negative 77%. We've got revenue growth year over year for the quarter is down 14.8%. EBITDA, negative 18.32 billion. Diluted EPS, they lost $1.63 a share the last 12 months. And then the current ratio is not the worst we've seen here. It's at 1. So it doesn't look like they're going to face any short-term liquidity issues. And they do have positive book value per share here. So they are showing positive common stock equity. Let's look at the balance sheet really quick just to take a look at that. So if we go to balance sheet, and let's look at the annual first here. Yeah, you can see that they are consistently, since 2020, having more assets than liabilities. And they're having positive common stock equity there. Then if we come into the quarterly here, yeah, you can see most recent quarter. Actually, every quarter we're seeing here, they do have a positive common stock equity. But you can see it is dwindling. Look at June 30th, 2022, they had 44.3 billion. 32.1 billion in common stock equity, and that is dropping off. So each quarter that we go here, that stock equity is dwindling. So not a good sign here. I mean, you can just see they're just bleeding money. They're just hemorrhaging a ton of money. And if we look here in Thinkscript and we go to not the 3-year weekly, but if we switch up the time frame here, we go to like a 10-year you can see that they have been around since 2018. So the stock has been trading since 2018. So this thing is 5 years in, and they are still just hemorrhaging a ton of money. So for me, just looking at their financial metrics and their performance and how their positive common stock equity is getting lower and lower quarter after quarter, this is not something that I would put my money in. If anything, I would probably sell the pump. So recently we did see a pump here. If you look at the weekly, this thing rallied up to $15. That would have been a great short opportunity. You see some other spikes in here where they made nice rallies. I think those would have been good short opportunities as well. So I just wanted to provide an update here on NIO and kind of let you know what I think about it and what my position would be. I don't have a position on it right now, but if it does go on another rally, it does go on another hard pump, I'll be looking to sell calls on this thing. So I'll continue to keep you updated here on NIO. Please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.